Everybody, this is Josh Jelinski, the financial quarterback.
Sorry. My bad. Start again. There you go.
Hi, everybody. This is Josh Jelinski, the financial quarterback, and we have special guest Barbara Weltman, who has been a popular guest in previous shows. She's going to be talking about small business taxes for 2021, tips, and more, and her book will be the featured book of the hour. So call us, 888-988-JOSH, if you want her new book. Also, if you have a question, we are live on YouTube, so type into the chat box any of your small business questions. So Barbara, how have you been? Thanks for being patient. I had a new baby born a week ago and have had quite the crisis, so... Thank you.
Congratulations. I hope everything is going well now. It's an exciting time.
Yeah, very exciting. Yeah, we still need prayers for the little guy. He had intestinal surgery this week and maybe in the hospital for a while, but we're praying for him every day. So thank you. And so, Barbara, what's in previous weeks, the last 2 weeks, it was revealed that Peter Thiel has $1 billion+ in his Roth. I don't know if you want to talk about that and what your take is on the $1 billion Roth IRA by Peter Thiel, since you're a tax expert.
That's quite impressive, but I think we should really focus on small businesses because in the past, this is unprecedented tax times. We had 5 major tax measures in 15 months, which means for small business owners having to adjust to, take advantage of, learn about all these new tax rules. And how many of us can have $1 billion in a Roth? But all of us who are running small businesses do need to know of what's going on now so that we can take advantage, as I said, of the new tax breaks.
No, we're going to get to tax breaks you can take advantage of now, small business tips, but since the Peter Thiel was kind of current events, how can somebody who has a small business, maybe they want to put their business shares in a Roth, how do they do that?
Well, first of all, I want to say that this whole concept is not tested. I congratulate him on trying something new and exciting and perhaps quite profitable, but the IRS has not ruled on this strategy yet. And so I do advise caution about doing this, about putting your business into a Roth. There have been some challenges already, and so technically it might be possible to do, but I would kind of advise a wait and see attitude.
Yeah, because some people say it's a prohibited transaction. Some say, well, he really didn't own the company; he owned shares. So I was dying to find out from a tax expert's perspective, how do I do that? Or
well, you raise some very good arguments, and undoubtedly the IRS is going to take a really close look at something like this because they don't really want to be able to convert business income into tax-free income. So they want somebody to pay taxes on the business profits.
Yeah, well, if you think about it, he didn't probably own. He probably did it in a kosher manner if they're talking about it, but we'll see. So let's get to small business taxes that the rest of us can use. Although, hey, if somebody's a small, closely held business, I think that the way, I think you can't really put your business, your closely held business. There is some rule like called the ROBS, the rollover for business startup purposes. Or I guess that's how they get around it, but it's very bit convoluted. But I'm sure a lot of people have done it. How do I put my small business in a Roth? So it's not something you're advising people to do now.
I wouldn't run out and do it. I'd kind of discuss it with your tax advisor, and as you said, technically you might be able to go through the steps and make it work, but I think it's going to raise some eyebrows.
Wonderful. So what are the new tax laws that our listeners and viewers now on YouTube? So folks, if you're on YouTube, we are with Barbara Weltman, best-selling author, from J.K. Lasser's Tax Guide for 2021. What's the formal title? That book is always it's like the Small Business.
Well, we have J.K. Lasser's Small Business Taxes 2021, which is for preparing 2020 returns. Many small businesses have submitted returns or are on extension, but it's also for planning for the coming year, for 2021, because we're in the midst of paying estimated taxes for the current year.
Yeah, and you wrote 1001 Deductions and Tax Breaks for 2021, also from J.K. Lasser. So you're a prolific author. What's your latest book? I know you've written a ton.
Well, we're working on the 2022 editions now, because we have to get ready to advise people on what to do for 2021 and 2022.
So, well, let's get right into it. So what are the top 3 things our viewers should, and listeners on the radio and podcast just tuning in, should listen for? What should they realize has changed, and what do they need to take advantage of?
Sure. One of the great breaks is the fact that if you've gotten a government-supported program like the PPP loan, or now with the program for restaurant grants, or the theater and those kinds of venues, you're going to be able to get tax-free income. In other words, you will be able to, if you qualify, get loan forgiveness, plus you can deduct the expenses that are covered by this loan forgiveness. So your employees' salaries, the rent, utilities, those costs are also going to be deductible. So it's really one of the few times in the tax law that you kind of get double break here: tax-free income and the write-off. So that's one thing, and that's on the income tax side. But I think we have to not forget about the employment tax side, because throughout COVID, the government has tried to encourage or require employers to provide certain assistance to employees, and with the incentive that you get a break on your employment taxes. So, for example, we have the employee retention credit, which runs through the end of this year. We had one last year, but this is greatly enhanced this year, and it's designed to encourage you to continue keeping employees on the payroll, and it's paid for, in a sense, through the employment tax credits. Also, what was new was a requirement for
Barbara,
businesses.
slow that down real quick. Let me interject. The employee retention tax credit, I always get confused by this. Is this something you got to go to your accountant for? Is this something you got to tell somebody, or you just get it from your payroll company?
All of the above. So it depends. Not all small businesses work with a payroll company. Some do it through their accountants or their in-house bookkeeper. But this is something that you will want to pay attention to, because it's something that comes off on your quarterly employer tax return. So it's something that you will see every quarter. So that's something to pay attention to.
No, fantastic. And you were talking about some more tax benefits for our listeners?
Yeah, sure. So the government requires businesses that have group health insurance, 20 or more employees. They have to offer COBRA coverage, continuation coverage. Employers have to pay the premiums for involuntarily terminated employees or those with reduced hours from April 1 through September 30th. But again, it's really not coming out of the employer's pocket, because it's supported by the employment tax credits. And all of this is refundable. So if the tax credits don't cover it, you're going to still be able to get it. You're going to get the refund. The employer will, that is. So I think the important thing here is for employers to, as you mentioned, talk to your payroll company, talk to your tax advisor, your CPA, and understand what the breaks are, what you must do, and what you may do. Because, again, this year, for example, paid sick leave and paid family leave related to COVID, employees who may be sick or caring for someone who is, those breaks are voluntary this year. But again, if you take advantage of them, the cost is covered by employment taxes.
Wonderful. So what other tax benefits for small business COVID related should we do? So we got the PPP, got the loan forgiveness, PPP 1.0, PPP 2.0, the ERTC. I'm just trying to do a recap before we go to the next one. And then what else?
Well, we have the grants for the restaurants. We have the restaurant grants, and we have the grants for the shuttered venues for talent agents and theaters and those kinds of venues. So and again, those are loan programs where there is forgiveness available. Unfortunately, the money has run out in some places, but I think we're at the stage where many businesses have received this money, and now they have to apply for the loan forgiveness. So that's where we're at now. So I think businesses must be talking to their CPAs to prep all the loan forgiveness applications.
Wonderful. So we're going to take a short break. We're with Barbara Weltman, best-selling author, prolific author. Her website is bigideasforsmallbusiness.com. And folks, if you schedule and keep your no obligation strategy session with the financial quarterback team, we will throw in one of her latest books on tax deductions for 2021. We will buy you a copy of her book. She's many different books, either Small Business Survival book or the J.K. Lasser book, if you schedule and keep your no obligation review. But call us now, 888-988-JOSH, 888-988-JOSH. Up next, we're going to be talking more about small business tax breaks and some programs the government is offering to help small businesses. We'll be back after this. And we're back. This is Josh Jelinski, the financial quarterback, with Barbara Weltman of bigideasforsmallbusiness.com, talking about tax changes that small businesses should be aware of. So, Barbara, what other COVID-19, we talked about accountants and advisors, and we love them, but really, they're not volunteering this information. I have people listen to our show every week, and they say, Josh, the quality of the guests, like a Barbara Weltman, like others that we have, that's how they learn from this stuff. And then they go to their accountant and say, I remember that, and I'll do it for you. But it's not like they're being volunteered this information. So you got loan forgiveness, you have PPP, you have ERTC. What other tax changes should small businesses be aware of? Or is that basically it?
The tax law is continually changing. And one of the things that we have to be aware of is I think that the government programs are sort of phasing out. And we're getting back to reality, if you will. And I think the regular tax breaks should not be overlooked. I think this is the time to be looking at all of the opportunities that there are for small businesses to save money. Josh, we're in a really interesting time where so many businesses are just starting up now. Many businesses, as we know, closed during COVID, but the number of applications for new businesses is quite impressive. And so businesses should be aware of their ability, for example, to write off their startup costs. Once they open their doors, they can write up the costs that they incurred for getting started and in the first year. So that's there are limitations and eligibility requirements, but all that said, that's something to not overlook. There are incentives for hiring individuals from targeted groups. And one of the targeted groups, not to be overlooked, this is the work opportunity credit. And one of the targeted groups that entitles an employer to a tax credit just for hiring is for the long-term unemployed, 26 consecutive weeks. Now, there are a lot of people out there who fall into that category. So here's basically a freebie from the government many businesses are hiring, looking to hire. So be sure to check whether you're hiring someone from a targeted group and to determine whether you can qualify for the tax credit. And you do have to submit paperwork forms to your state workforce agency to get this certified. So that's a tax break to think about. And again, tax breaks for many businesses now are struggling to find employees, retain employees, and so they have to offer benefits such as retirement plans. And again, contributions by employers to retirement plans are write-offs. And there are tax credits for starting a retirement plan. There's a tax credit for starting an automatic enrollment plan, a 401k, in which employees are automatically enrolled unless they opt out. So there are just so many breaks out there for businesses to incorporate into their business practices. And that's what they should be thinking about.
Oh, fantastic. We're with Barbara Weltman of Big Ideas for smallbusiness.com. And folks, if you want to get her book, Small Business Taxes for 2021, that will be yours free when you schedule and keep your no obligation review. Or you can get the 1001 deductions and tax breaks, which we have to remember sort of the blocking and tackling of basic tax planning. COVID-19 relief is good. I'm also going to break down all the stuff you said the first 10 minutes because we hear about these things a lot. But we've had Ernesto, who's been a viewer. He's one of my producers. We actually instigated him to finally get PPP months ago after we had a guest. So he'd been listening for months. So I still think we talk about these things, and it's almost confusing to most people. So they put their head in the sand. So I want to go back to COVID-19 relief in a little bit. And we're talking about sort of retirement plans. What is the benefit if a small business picks up a retirement plan? And what do they have to do it by? Because I don't remember getting that one when I set up my retirement plan for my small business.
Okay, well, if you're a small business, and in other words, you qualify as a small business and you don't have a qualified retirement plan, and you set one up that covers at least one employee who's not, in tax parlance, highly compensated, meaning someone who's not the owner, then you may qualify for a tax credit to cover the administrative costs, the cost of educating employees about participating, and the credit can be as much as $5,000 a year for the first 3 years of the plan. So that's a real biggie. So you want to set up a 401k? This might be a real way to go. And again, I mentioned that there's an additional credit for adopting, even if you have a plan. But if you switch or start a plan with automatic enrollment, like a 401k where employees are automatically enrolled unless they choose not to be enrolled or they want to reduce their contributions, that's an additional $500 per year for up to 3 years. So, and these are tax credits. And credits, you have to recognize, We've been talking about credits. I've mentioned them. I mentioned the work opportunity credit, and these income tax credits are dollar for dollar reductions of your tax bill. Remember, deductions are only worth as much as your tax bracket. So if you are in, let's say, you're a sole proprietor, or you're in the 22% tax bracket, you spend $1,000, it only saves you $220. You get a $1,000 tax credit, that saves you $1,000 in taxes.
No, fantastic. And an important reminder from Barbara Weltman, author of the 1001 Deductions and Tax Breaks for 2021, your complete guide to everything that's deductible. Her website is bigideasforsmallbusiness.com. And she also does an idea of the day. We'll talk about what the idea of today is when we return. This is Josh Jelinski, the financial quarterback. And call us right now at 888-988-5674 for the free strategy session. And when you do, we'll give you one of Barbara's books for free just for attending the meeting. So call us now, 888-988-JOSH, 888-988-JOSH. We'll be back after these messages. And we're back talking to tax guru, attorney, and tax expert Barbara Weltman, best-selling author as well. So, Barbara, we're talking about tax credits for setting up a 401k. Do you get that for setting up a pension plan or a profit-sharing plan?
Yes, you do. It's any qualified retirement plan for your employees.
Oh, fantastic. And that's a dollar-for-dollar credit. What other credits are out there? I know a lot of people are worried about the Biden tax proposals, but we still are under the Trump tax cuts. So shouldn't we be acting as if they're not going to go away, even though they are going to go away, because they might grandfather you in on what you do by the year end?
Well, exactly. And they're not necessarily going to go away. Things may change. For example, one of the credits that's really good for many small businesses is the research credit. And this is a credit for increasing your R&D expenditures. I don't think this credit is going away. This credit's here to stay. In fact, it could get even better. So, and for small businesses, it could be an income tax credit or a limited employment tax credit. So the R&D credit, the research credit is certainly one to think about. There also
well, wait, what qualifies as research?
These are we may think of research as these big drug manufacturers doing all the research, or these big tech companies doing all the research, but you'd be astounded about how many people are doing small businesses or even individuals, inventors in their basement, putting money into research and trying to create things. And there are tests to be met to qualify for the credit. But again, this is something that shouldn't be overlooked.
And what do you get? So if I want to, create a software that has to deal with finances.
The credit may be as much as 20% of your increased expenditures.
Okay. Oh, great. So if I spend $100,000 on research, it could be a $20,000 credit.
Right.
Okay.
That's potentially what it is, but it's an increase over the prior years, and and for new businesses, it's a little complicated, but that's what it is.
Wonderful. And you were I cut you off when you were going to tell us about another tax break or tax credit.
Well, I was thinking a lot of the other tax breaks that I don't think are going to disappear are incentives. These are deductions for buying new equipment and machinery. And many businesses want to do this not only because they may need additional machinery, but because they want to replace what they have, because what they have is old. Maybe it uses too much in terms of utilities, and they can be more efficient and enable their staff to work more quickly. And so there are abilities to write off the entire cost of the equipment that you buy, all in the year that you buy it and put it into use in your business. You know, in the old days, we talked a lot about depreciation, and you had to spread the deduction for the cost of these items over many years. Well, now there's bonus depreciation, there's first-year expensing. Again, these are incentives to just write it off immediately. And so if you are making this kind of investment, even if you finance the purchase in whole or in part, you get the write-off.
Wow, fantastic. So what about, so that would go for cars, potentially. You get the, to write off your car, you write off your copy.
There are limitations when it comes to vehicles. I don't want to lump vehicles in with
vehicles
with
are a little different, because it depends on what type of vehicle. But isn't there the big van? You know, if you have a towing capacity above a certain 6,000 pounds, you can write the whole thing.
The heavy SUVs can be written off, but the smaller vehicles have limitations. There are incentives for buying electric-powered vehicles, although no more for GM and Tesla vehicles, because they've sold more than 200,000 of their electric-powered vehicles, and so they no longer qualify for the credit. But for other manufacturers, that credit is still around.
And what is the credit as much as, I mean, when I bought my electric, it was like a 12,000 something credit. It was amazing, or something.
No, the maximum credit now is I think $7,500.
Yeah. And
it may be less. But again, the good news is you can check it before you go shopping. The IRS has a landing page to show you which vehicles qualify and how much credit you can claim.
Wow. Yeah. And what's that website? Do you know?
It's at irs.gov, but I don't know the exact the slash additional information.
Yeah,
but just look for electric powered vehicles.
That's interesting.
And you'll get to it.
Yeah. It's the qualified plug-in electric drive motor vehicle. Yeah. It's 7,500. It's saying now. What is it? IRC 30D, unless it's a dated release on the irs.gov website. Sometimes, yeah, they have Audi, Azure, BMW, Honda still, you know, so it's, yeah, that's interesting. You know, so no longer does Tesla, they have a phase out. So
Tesla has phased out and GM has phased out.
Wow. So you don't want to buy the Tesla, you want to buy the Audi or the Lucid or the whatever. And it's interesting when I'm reading this.
You mentioned, Josh, the Biden proposals, and we don't know with this whole concept of supporting electric-powered vehicles as opposed to fossil fuels. We may have new breaks coming down the pike, so this is something to watch out for.
Yeah, maybe they'll be bigger.
That's right.
You know, the problem with electric cars, I mean, this week, another, a brand new Tesla Plaid just exploded in flames.
Yeah, I heard about that.
And there was a tragedy. Now, and to be honest, I'm sure other cars explode in flames and they're not a big, as big of a news story to be fair to Tesla. But it is interesting how we really don't know what we're truly getting into if everyone drives electric. No emissions from the cars, but then there'll be more emissions from all the energy plants and what we need to power them. Or I don't think our grid is capable enough, especially with a lot of things phasing out nuclear. But anyway, I digress. So we talked electric vehicles. What about the SUV, since you're the expert on tax deductions? Probably a good year to buy an SUV now before that goes away. Can't you buy like a big SUV and write the whole thing off or something like that?
The vehicles that have a weight of more than 6,000 pounds qualify for for bonus depreciation, and therefore this year it's 100% bonus depreciation. So that's a pretty good break.
What does that mean? So if I buy a car and it's $50,000 and has a 6,000 pound towing capacity, because those cars tend to be more expensive.
It's not the towing capacity; it's the weight of the vehicle.
Oh, it's the 6,000 pound weight. So if it's 50,000, and you buy some, a Suburban,
buy the Escalade or the Tahoe or something
an
like
Expedition, the big Ford
the
Transit
big
vans. And it's 50,000. And your tax, your income's $200,000, you owe $25,000 in taxes, and you're in a whatever. Is it like a deduction or a credit?
It's a deduction, but remember, this is only for business. This isn't for personal. The electric vehicle credit is personal or business, but the write-off for the heavy SUVs is only for business. So, for example, if you use the vehicle, let's say, 75% for business and 25% personal, you're only going to be able to write off the 75% of the cost as a business expense, and you can't write off the personal portion.
Oh, fantastic tips. So what other...
The thing about taxes is it's very confusing. I admit it. I do it every day. I've done it every day for more years than I care to admit. And it's very, very confusing. And it's getting more confusing by the minute. We have laws that are effective for just part of the year, for the 1 year, for 2 years, and then they go away, and then they're replaced by something else. A lot of the personal tax breaks this year, for example, are just for 2021. The child tax credit breaks and the change in the dependent care credit, just for for some of them are just for a year, some are for 2 years. So again, it's complicated, and I think it's a really good idea to use resources. The IRS website, it does have a lot of good resources. They have a lot of FAQs now that are very understandable and very helpful. And my books, of course, are helpful, and working with a tax advisor is a great idea too.
Wonderful. So what about any other tax breaks or deductions that are often overlooked?
Yeah, lots of things are overlooked. I think, in my experience, one of the biggest problems that many small businesses make is that they fail to have sufficient records. You have to keep good books and records, and by not doing it, you may miss out on taking legitimate write-offs. For example, the tax law is very specific on the kinds of records you have to keep for your business travel, for business gifts, for use of a vehicle. If you're using your personal vehicle for business driving, which many small business owners do, if you don't have the right records, you can't take the write-offs. So I really advise, the good thing is that there are many apps to help you do this. The record keeping today is so simplified. You don't have to know anything about numbers or what to do. There are apps to help you do this, but you got to do it. And it's a chore. And many business owners say, oh, I'll do it later, or I'll do it another time, and you forget about it. And then you forget what the information is, and then you forget to do the records. And then come tax time, you can't take the deductions.
And what are the apps? Actually, we'll leave that as a cliffhanger. We'll talk about, what are the records you need to keep? What are some apps you recommend? When we return with Barbara Weltman, best-selling author of the 2021, she got a bunch of books. The Rational Guide to Building Small Business Credit. You can get an Amazon Small Business Survival book. Smooth Failing. She's such a prolific author. Also most probably noted for the J.K. Lasser series Guide to Self-Employment, also the 1001 Deductions, and the 2021 Guide for Small Business. If you call us right now at 888-988-JOSH and request your free financial quarterback strategy session, I will give you one of her books at no charge when you schedule and keep your no obligation review. So call us now, 888-988-JOSH, 888-988-JOSH, 888-988-5674. We'll be back after this. And we're back. This is Josh Jelinski, the financial quarterback, with big ideas for smallbusiness.com's Barbara Weltman. That's her website. Tons of books she's written. She's enlightening us on taxes, all things taxes today. So, Barbara, what are the records that someone should keep? Good credit card. Does having everything on your credit card count from the IRS's perspective?
No. There are two types of records. So one is the kind of just notations of your income and expenses, something that you would input into QuickBooks or some other accounting solution, whether you do it online or desktop or mobile. And again, you don't have to be a numbers person to do this. You just make sure that you track your income, track your expenses. Then there's the paper backup, as you mentioned, invoices, receipts, and other things. Today, the good news is you don't need file cabinets to keep all of this paperwork. You can scan everything and just keep records in that way of documentation showing the expenses that you incurred. So it's not enough just to keep a receipt. You have to have that in your accounting records, and then you should either retain the paper receipts or keep an electronic record of them.
And would credit cards be sufficient for that backup? Credit card statements?
Yeah, the credit card statements could be very helpful. And again, that's documentation. But that doesn't replace your accounting, the accounting that you need to do. When it comes to your personal finances, many people just kind of wing it, and they don't necessarily keep a lot of records. They may keep enough just to get them by at tax time. But when it comes to a business, you are required by tax law to keep books and records. It's mandatory. And so you do need to have this kind of accounting solution to track all your income and expenses. And then, of course, those credit card receipts, credit card statements, bank statements, your PayPal statements and such online, all of that will be helpful to prove the expenses. You need it for a lot of reasons. You need it not only to help you prepare your tax return and to thwart any kind of IRS challenge. If the IRS says, hey, you took this write-off, what does it mean? So you want to have this paperwork to kind of just cut them off at the pass, if you will. But also, you want to know, are you making or losing money? And if you don't have a good accounting system, you won't know this. You need to know how you're doing on a monthly basis or quarterly basis, and have these records to be able to reference to know how the business is doing. That way you know what actions to take. Do you have to cut expenses? Do you have to raise prices? Tax savings is just one aspect of the overall picture of running your business.
No, fantastic. So with inflation on the rise, do you have any tips for small businesses to cut expenses?
Yeah, that's a great question, because we are dealing with inflation now. And so I think businesses have to be very careful about borrowing money at this time, because interest rates are going to go up. So if you have lines of credit or credit card balances, that's one area where you want to be able to cut if you can, because going forward, we can expect the Feds have said they're going to maintain lower rates, but the rates could go up, and you don't want to be caught short there. Then when it comes to expenses, the price of everything is going up. The price, the gasoline at the pump. If you have delivery trucks, it's costing you more. The price of your inventory because of supply chain issues. We know that the price of so many items have increased. And another area where the price is going up is the cost of employees. Not only are minimum wage rates rising, but businesses have to pay benefits and increase pay to employees in order to attract and retain them. And especially the challenge for small businesses is to compete with larger companies that offer a big menu of benefits and can better afford all of these costs. So in terms of cutting, you have to look at every aspect. You can't overlook any expense. For example, do you need all those subscriptions you're paying for? Do you need the space for your office? If your workers are working remotely now, all of them, part of them, maybe you will be able to renegotiate your lease. Maybe you don't want to renew the lease when it comes up. Maybe you want to sublet some space. So those are the areas you want to start thinking about. But I think on the flip side, and to be realistic, it's not just cutting expenses now. It might be raising prices. And it's scary for some small businesses to do this because there's a fear you're going to lose customers, and that may be so. But if you're paying more for things, you got to get it somewhere. Otherwise, you're working for nothing, and that doesn't make a whole lot of sense.
Yeah, fantastic. So up next, we're going to be talking about any other advantages that a small business can take in these uncertain times. Also, what the Supreme Court decision on the Affordable Care Act, aka Obamacare, means for small business. When we return with J.K. Lasser's 2021 Small Business Guide, author Barbara Weltman. You can check out her work on big ideas for small business, and we will talk about the idea of the day when we return. And folks, call us now, 888-988-JOSH, 888-988-5674, and you get your free financial quarterback strategy session when you schedule and keep your no obligation review. So call us now, 888-988-JOSH, 888-988-JOSH, 888-988-5674. And we're back. This is Josh Jelinski, the financial quarterback, with Barbara Weltman. Make sure you give us a call at 888-988-JOSH and schedule your no obligation financial quarterback team strategy session. That's 45 minutes with yours truly and the financial quarterback team. So Barbara, the idea of the day, the IRS FAQs on 2021 paid sick leave and paid family leave. What's that about?
Well, we talked about it a little bit, that small employers may choose to offer the paid sick leave, the paid family leave to employees that are impacted by COVID-19, and they can get an employment tax credit to cover the costs of doing this. There are limitations about what the credits are and what the payments to employees are for purposes of the credit. And this credit runs only through September 30th of this year, unless, of course, it gets extended again. And I guess that'll depend on the course of the pandemic and whether these variants pop up or what. So who knows? But the IRS FAQs really detail the numbers and what you have to do. And I have to tell you that they're pretty understandable. They're plain English, kind of really very helpful. And my idea of the day is designed to just, in a sentence or two, point you in the direction of finding out more information about something, whether it's something from the IRS or something from the SBA or the Department of Labor related to your business, or other things going on, new products and opportunities for small business, perhaps contests that you might want to enter, things like that. So it's meant to be something that you open in your email every morning, a sentence or two. And I've heard from many people, I've been doing this for years, and many people say, well, maybe 3-4 a week are relevant to me, but it doesn't take much time to read the others.
Oh, yeah, and it's chock full of good information. I always find some of these tax credits, though, so obnoxious. Like, I read one of them last year. We had people who had COVID, and they had it prior to the date. I could be wrong on this, but I think when my accountant checked into it, it was like prior to the date, because we were in New Jersey and everybody was getting it earlier. It was like prior to the date. And if you had employees with COVID and you paid them, you got this credit. But if you did this, you didn't get this. And then I was not eligible for a lot of this stuff. I was eligible for the one where they did the payroll and the PPP. It was interesting. It was I don't know. Some of these things I find don't work.
Like I said, it's very complicated. It's very confusing, and because we sort of had this rolling legislation. We had 5 bills, and they changed dates, they changed amounts, they changed. So it's unbelievably complicated.
What about the vaccine? So if I let an employee take off for the vaccine, do I get money from that? Or no? I heard there was something like that too.
Well, they added that as one of the COVID-related conditions for qualifying. So yes, letting an employee off for that and paying them to cover that is part of the credit.
But you got to pay them.
Yes.
Yeah, if they yeah. So then I'd have to go back of who tabulated that hour, who didn't. It's quite interesting. It was it also was annoying because we didn't really lay people off. Maybe one person had COVID, had health issues and stuff, couldn't work due to health. But many of our people, we didn't lay anybody off during COVID. And I find that when you didn't lay people off, you only got the PPP, but it was like the other things, it was like we were paying people. So it wasn't like, it's interesting, these, a lot of these rules. So paid sick leave, family leave, that does include the vaccine thing, or that's a different part of the.
For now, yeah, but yes, it does now.
So, but that's only if you pay somebody who took off to get the vaccine, correct?
Correct.
Like when you see going into Starbucks or whatever, or Wawa, which is near us, you come work for us, we'll pay you to get the vaccine. I guess that's what they mean. We'll pay you $300.
I really don't know what they're offering. Maybe they're offering some bonus. You don't know. These companies are now, to attract employees these days, they're giving cash bonuses to many people to sign up. So they're perhaps incentivizing people to get vaccinated to keep the workplace safer, and maybe they're giving them cash. I don't know.
Yeah, I think there was a $300 to $500 bonus if you get the vaccine.
Yeah, that's it.
Then the other thing, which is interesting, some employers are now giving away free college. So who needs the government to do that when you have these employers? So I think if you go to like Starbucks, if you work at Starbucks and you're a barista, they'll pay for your college.
Wow.
It's a lot better than a $5.29. I'm going to say, hey, little Josh, you got to go work at Starbucks.
All right.
make me my cappuccino. So as we're moving on to different tips for small business, what are the things that haven't we covered that you'd like to share?
Well, you mentioned the Supreme Court decision and the Affordable Care Act. So
Sure.
This was the third time that the law, which was enacted in 2010, has come before the Supreme Court. And what the court did this time was that it did not rule on the constitutionality of the law. It just basically said that the parties, the states and the individuals that brought the case didn't have standing to bring it. Technical legal rule that says the court does not have the authority to listen to the arguments. So what this means for small businesses and individuals is that all of the provisions of the Affordable Care Act that are in place now, that are on the books, are effective. And for small businesses, anybody who's an applicable large employer, 50 or more full-time equivalent employees must provide affordable minimum essential health coverage or pay a penalty. So that's going forward, even though we know that the individual mandate has gone away, the employer mandate is still around. What's more, the additional Medicare taxes, the tax on earned income and the tax on net investment income for individuals with modified adjusted gross income over a threshold amount, those additional taxes are something that we still have to contend with. For individuals who don't have employer health coverage, the premium tax credit is still available. And in fact, they've made it such that regardless of income, everybody will be able to get some kind of subsidy this year and next year as well. So there's a lot to think about when it comes to the Affordable Care Act. It's here.
Well, thank you so much, Barbara Weltman. Another great interview. We loved having you on. I think we have listeners who even work with you. I remember when somebody called up and said, yeah, I work at J.K. Lasser. And he chimed in if I had some...
who you're talking about.
Oh, you know who I'm talking about?
I sure do.
Oh, that's funny.
I know he calls you.
Yeah, the guy's he was great. I forget who he is, but he chimed in one time, so it was fun. So you do a lot of great work at J.K. Lasser, also on your website. I'm going to sign up for the big idea of the day, big ideas for small business, because we need a lot of guides when it comes to tax help. Final thing, I do want to throw this out. Cost segregation. So a lot of people want to buy a house, or they want to buy a commercial business, or they want to buy a vacation property. Where do they go to for that? That's not something you hear from most accountants, but it's a fantastic concept where you can get a massive write-off when you buy a property.
Well, it's only relevant to commercial property. It has nothing to do with buying your home, your vacation home. We're talking about buying commercial property, which generally you would have a long period for depreciation, 39 years. But with a cost segregation study, you may be able to write off certain components much more quickly. But it's highly technical. You need experts in this area. This isn't a do-it-yourself kind of thing. You need engineers and others who are familiar with the rules for cost segregation studies. The IRS has an audit technique guide on it to tell their examiners what to look for anybody claiming this kind of thing. So very technical, only for a commercial property.
Would a commercial be like you want to buy a rental or vacation rental and rent it out for people? Like you're using it for business purposes, or?
I think it's really meant for the more for the factories, but it could be. It could be for any kind of exclusive business property. I have never seen it used for a vacation home, ever, for a vacation home that you rent out. This is something that's involved with large buildings that have many components. We're not talking about a little cabin that you may be renting out as a vacation home.
Wonderful. Well, Barbara Weltman, thanks for joining us. Folks, check out our website, bigideasforsmallbusiness.com, and call me right now, 888-988-JOSH, 888-988-5674. And we will give you one of her books at no charge when you schedule and keep your 45-minute financial quarterback strategy session. We'll be back after these messages. We're done with this segment. We'll do the next live video. Keep this as videos of the week.
Tell her again, I'm muted.
Thank you, Barbara.
Oh, good luck to you, Josh, with your baby. Thinking of you.
Yeah, it's quite a crisis, but thank you so much. I appreciate it.
Okay.
Thanks
You take care.
Thanks for your flexibility. Take care.
No worries. Okay, we'll do it soon. Bye-bye.
Thank you.
Bye.
Bye.
Okay. So, Noah needs to recalibrate because that's at the hour mark. Hey, Noah?
Well, you're stopping it and then restarting